Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, last week we spoke about the stickiness, around the top 40 and also the S&P 500. And in fact, last night on Stockwatch, Paul Chakaduka and I were talking about 2,800 on the S&P 500, and it's just the market just can't really seem to find a clear way off this level, either higher or lower.
That's it. And we looked at this weekly chart of the S&P 500 last week, and we pointed that out, and it's worth looking at it again. I do follow this up each week as it builds because it's just interesting, particularly, as you say, around this 2,800 area. So the chart here is interesting from the point of view that it's formed an evening star reversal pattern over the last 3 weeks. Now, last week, I think I alluded to this potentially forming, but it was too early in the week at that stage to say with any certainty whether it was going to actually happen or not. Now, an evening star reversal is what you've got there, where you've got those three candles of the last 3 weeks. So you have an up candle, or a white candle is in this case. Then you get that what's like a little plus sign. It's called a doji. And what that really means is that over the week, buyers and sellers were equal in their force because the opening level and the closing level for the market for the week was the same, right? And then you get that big red candle that formed last week, and that is a bearish candle. Now, when you get those three together, typically that is referred to as an evening star reversal. It's telling you that there's a shift in the balance of power happening over the 3-week period away from the buyers and in favor of the sellers. Now, I mean, it doesn't have to always necessarily mean that it's going to be a top, but often it will indicate there's a top there. And it's notable that it happened at the underside of this prior upward trend as well, and that it's happened around that 2,800 area. So on the weekly chart, it does look as if the market's sort of beginning to stall at that sort of area. But then having said that, if we look at the daily chart of the S&P 500 here, what I mean by that then is that every one candlestick pattern here represents 1 day worth of trade. What's still very evident is this 2,800 area that you alluded to, and how the market is very sticky around that sort of area. We saw the S&P 500 retrace about 75 points odd into Friday last week. Yeah. Then had a firmer close into the end on Friday. Monday it had a very strong session, and as we sit here now, the futures are sort of more or less flat or slightly up at the moment. So again, the market is bumping up into this 2,800 area. What is notable also is this positive reverse divergence that you can see on the stochastic oscillator at the bottom here. What that means is that the price action is still making higher lows, and yet the oscillator is making a lower low within the overall uptrend. And that is often an indication of a move higher to come. So I don't know that the buyers are necessarily defeated at this point yet.
I mean, and almost the very fact that it keeps going up there, maybe pulling back a little bit, just indicates there is some sort of, there could be momentum higher.
Well, there could be, and I think that's the thing. Like I said on the show last week, what's the hardest trade to do right now? The hardest trade to do right now is probably to buy that market, because you think, well, it's in resistance, it's struggling. But yet, every time it seems to be moving lower, the buyers are there to then take it higher again. What concerns me, or that won't say it concerns me, we don't have a trade on, so it doesn't concern me. But what is interesting, I suppose, is that you would have found that a lot of shorts would have been loaded in at this sort of area now, because it's obvious to short it at 2,800, expecting the pullback. And now we had a very shallow little pullback, and now it seems to be going to the upside again. So that type of trading action suggests to me there's a possibility that we could actually see this market punching out through 2,800 to the upside, and that would be a development that would squeeze all the shorts and could see the market pushing higher still.
Yeah, okay. And then our own markets, we might sort of be heading down again.
Yeah, look, if the S&P 500 was to squeeze higher, then I'm not sure we will go lower. But in the last couple of weeks, we've seen evidence again that there's been selling pressure on the top 40 at higher levels. So here's the top 40 spot index. What's interesting is that this area around 50,000 has been very, very sticky over the last couple of weeks. You can see all the long tails to the upside on the daily candlesticks in the last 2 weeks. And that also happens to come in at around about the 61.8% retracement of that entire sell-off that we saw from September into October of last year. So it's interesting that we're seeing this evidence of selling up at the 61.8% and around about the 50,000 area. If this market does dribble a little bit lower from here, then your support, the first immediate obvious level of support comes in at about 48,500. That's the bottom end of this blue channel, and it's also where we saw some prior highs from November and again in January and early February this year.
Yeah. Garth, obvious catalyst would be a trade deal or a good, a sort of a win-win trade deal, I guess, between China and the US, and I think we've mentioned that already. Yeah. But are people maybe placing too much reliance on this as a catalyst for markets either way?
It could be. I think there is an expectation that there's going to be a trade deal announced and that should be good news and the market will breathe a sigh of relief. I guess the devil will then be in the detail and say, well, what kind of deal? How good is it really? Yeah. So we need to see. I mean, at the moment, there's no real indication either way how soon the trade deal will be signed and what it will contain. Yeah. But if we did get a good trade deal, that could well be the catalyst that sees the US market pop a little bit higher.
Yeah, okay. So I think, I know you just want to have a quick look at the hourly chart of the top 40
Yeah, we haven't looked at this yet. This is now the top 40 future. I quickly wanted to look at this, just in the context of that last graph that we were looking at, which is the daily chart of the top 40 spot index. Just in terms of the levels that are significant here, 49,100 has become quite an important support zone, and the market has been down there today to test that area and appears to be bouncing off it as we sit here right now. And then at the upper end, we've got 49,800. Which is that downward trend that comes through the last couple of weeks of highs, really. So those are the significant levels we've got to watch. If the market were to break to the downside below 49,100, then there's a gap down at 48,500, and that would probably be targeted. On the other hand, if the market were to push higher, then we need to see a move above 49,800, and that would probably see our top 40 going back to the recent highs and possibly even as high as 51,000 potentially. So those are the significant levels that we've got to be watching in the near term.
Yeah, I think the words Orphe used are messy and lethargic, really, for markets at the moment.
Well, it has been, yeah. If you look, I mean, this goes back to the 19th of February. That sort of sideways action that you can see over there. So the market's gone nowhere for a number of weeks, which has been rather lethargic and a bit frustrating.
Yeah. Okay, well, let's talk about one of the recent trades. And it was a put on General Motors. It looks like this one has not done what you wanted in your calling time on this.
Yeah, I am. It's not doing what I expected. So just if we go back, I mean, we put this trade on at the end of January. And at the time, the share price of General Motors was around about $38. And the reasoning for buying a put option at that stage, and just to make viewers aware again, a put option is where you're effectively buying an option to sell an asset at a fixed price at a future date, essentially. But the option itself is tradable, and the price of that option fluctuates. But as the expiry of that option approaches, if the option is out the money, which it is at the moment, then ultimately the value of that option goes to zero.
Yes.
Now, we're in the final month because this option position expires on the 17th of April. And you always find that the last sort of 30 to 45 days of an option's life are when the time decay accelerates the most, and that's when you see the what we call theta, which is effectively time value, evaporate very quickly. And my thinking at the time of doing this trade was that General Motors had gapped up, but it pushed higher. It was retesting those prior highs from December at around about $38. And what I've noticed, I mean, I watched this share quite closely. When it gaps up like that, and it's done it a number of times in the past, when it gaps up, usually on some news, it invariably does come back and fill the gap within a month or so. You can see the most recent example was back in October last year, where the share price gapped higher, and then it ultimately filled that gap about 3 weeks later. Yeah. And my thinking at the time was that if we see this gap of 35 being filled again, then our put option would gain in value. We would bank the profit, close it out, walk away with some profits in the bank. As it happened, that gap has not been filled. You can see the prices continue to grind along at these higher levels, and it's not doing what we expected it to do. So before I see all of our premium disappear on this, I've actually decided to close it out. Okay. So I've sold it at 35 cents. We bought it at 84 cents per option. We bought 4 of them. And just keep in mind, every option on a US stock is 100 shares. So we effectively took 400 shares of exposure and it was at 84 cents per option, right? So I sold them out at 35 cents. It means that we lose $196. It's not the end of the world. Most of that mark-to-market loss had been accounted for right up until last week's show anyway. Okay. So it's not like this is a sudden new loss that we have to account for.
Irritating though.
Yeah, it is, but it's it's one of these things. It's a small loss. It's just over 1% of our capital, so it's not the end of the world.
Yeah. Okay. So there are two stocks that you'd like to look at this week to monitor, and not to trade as yet: Capitec and also one Duke Energy in the States.
Yes. So Capitec obviously needs no introduction. Most of our viewers should know that company. It's the strongest bank in our market by a long way, and has been for quite some time. And you can see the upward trend quite clearly evident over there. It now is busy consolidating at the moment, and that's healthy. What I expect to happen is that it might retrace back towards 1,200 Rand a share. And you've got the 50-day moving average there also, which comes in at about 1,180. So in that sort of zone, if it starts to find support and buying evident there, then I would look to buy the stock probably for a rally back to the recent highs again, above 1,300 Rand a share. That's Capitec. And then you mentioned Duke Energy. Now, this is a power company in the US, and their power industry is very different to ours. They don't have an Eskom, fortunately for them. They've got a lot of private operators. and Duke Energy is one of these companies, sort of a utility kind of business, but it's a good company, and technically this chart structure is looking very, very good. What's notable for me here is that it's bumping up against this overhead resistance at $90 per share. And you can see all the rising bottoms that we've seen since January. So that pattern to me indicates that the likelihood is that we're going to see a squeeze out to the top here. So if it breaks out convincingly above $90 per share, that's a buy signal. And we possibly look to follow that and go long of Duke Energy for a higher target.
Yeah, okay, so two shares to watch. Then the state of the portfolio is not too different to last week, I imagine. It's both slightly down.
Yeah, so South African portfolio is exactly the same as last week. It's still down 1.45%. And then our offshore portfolio, we're now accounting for the full loss on that General Motors put option. So we're down 1.3%. So not the best start to a year, I must say. We're lagging the market by a long way here. But it's early days, and as we've seen in the past, things can change quite quickly.
Yeah, well, you're not alone. There's not a lot of so this rally seems to have taken a lot of people by surprise because there actually hasn't been a lot of money put into the market. In fact, drawn out of the market, even though it's I think had the best start in about 30 years. So
that's right.
really,
Yeah,
it's been an interesting couple of months.
Yeah.
Garth, just very quickly to end off with, just a reminder that you can get a weekly alert from subscribing to the website.
Yes, if you want to know what's coming up on this show each week, we'll send you an email every Tuesday at lunchtime. All you need to do is go to traderscorner.co.za, go to the middle of the page, and you'll see a link there for a free weekly email. If you put your details in, it'll take 30 seconds of your time. Then what we'll do is we'll send you that email every Tuesday at lunchtime detailing what is coming up on this show for the week.
Great, we'll leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.